Prop firms offer a great opportunity for traders to increase the capital under their management and therefore massively increase the profits that they're able to make each month. However, prop firms usually have strict rules regarding drawdown. The majority of prop firms will have an overall or a daily drawdown, and if you violate the drawdown limits, you'll lose your account. For this reason, it's crucial to be able to manage your losses when you're partaking in a challenge or prop firm evaluation. Luckily, we funded many traders across the world, and so we know exactly what it takes to manage your drawdowns and manage your losses. In this video, we're going to take a look at a few actionable steps you can take right now to take you on the right path in your trading journey. But before we start, let's take a look at what happens if you don't manage your trading losses. Whilst trading, if you disregard drawdown, if you ignore it, and you don't make it your priority, you're gonna incur huge losses. It's that simple. No drawdown management will most likely result in losses that you're not going to be able to come back from. It's important to understand that trading is in first place about surviving in the markets. Profits come second. If you focus purely on the losses, you'll notice that your risk management will get better and the profits will come with that. Although this video is aimed at those looking to become a funded trader and obtain a funded account, drawdown management is equally important for those of you who are trading your own capital. Regardless, this needs to be a priority. One thing that most retail traders are terrible at doing is exiting their trades. It's very easy to enter a trade and carry on with your day, but the losses become real once you close the trades. For this reason, many traders lose more in a trade than planned and end up taking on a big drawdown. Before you enter a trade, you should know exactly at which point, under which conditions you're gonna exit the trade. For instance, you're selling Euro USD and there's valid swing high to the left from a few days ago. You may decide that this is the most obvious place for a stop loss. If the price breaks through this swing high, it may continue to the upside, and that means that you should most likely be out of that trade. As soon as the price reaches this level, you need to be out of your position. Don't hold and hope. That's not a good long-term strategy. That's why in trading, all the professional traders are using stop losses. They're using automated orders where they don't have to think about it and it just exits the trade automatically. This should all be considered and decided upon when creating your trading plan. I've seen time and time again traders losing their entire funded account in one regrettable day. This is often due to trading correlated pairs. For instance, imagine I take a position on the GBP USD with a 1% risk. This is within my trading plan and nothing out of the ordinary. Then a sell on the Euro USD comes along, a USD Swiss franc buy, and an AUD USD sell. All these additional trades meet my trading plan criteria, so I obviously take them. However, now if the dollar moves, my risk has increased from 1 to 4%. If you throw some additional slippage in there, I might just lose the whole 5% on just a single move of the dollar. This is something that you need to be very careful about when trading with a strict drawdown limit, as you need to be aware of the fact that correlated pairs need only one, or the correlating factor, to move for all of them to move in the same direction and multiply the loss. Now this point seems very simple, but you'd be surprised by how many traders just wing their risk management. When you enter a trade, it's best to have a fixed risk size. I recommend risking less than 5% of your remaining risk capital. For example, on every trade, I could decide to risk 1%. Then, when my stop loss is hit, the trade closes automatically and I don't have to think about it. There should not be any human intervention in there. You've set your trade, you should not try and influence it midway. An important thing to remember here is to not try and stay in trades for too long. You must be able to take losses as a trader. Having the same risk across all of your positions is going to make it easier for you to analyze your own performance and to keep to your trading plan. It's important to be aware of the high impact news that affect the currencies that you're trading. This can be easily found, for example, in the trading calendar in our dashboard. The issue with high impact news is that they create massive volatility around that time. So that means the price moves violently and your trade may not be closed exactly at the stop loss price you've set. That is because of something that we call slippage. What that means means is that whenever the price of an asset crosses your set stop loss price, the broker will close your trade at the next available price, which during these high impact news could be even easily 10, 20, 30, 40 pips away. Therefore, you might incur a much bigger loss than you have intended. Many traders experience big losses during these high impact events like NFP just because of slippage. So something to be careful about. Make sure that when you're trading, you're aware of what news are going to be happening in the next few hours or days, depending on the time frame you're using. Overtrading cripples traders in the market, as this often results in losses piling up. When either winning or potentially losing a lot, traders tend to get emotional and not stick to their trading plan anymore. And when you're breaking your trading plan, you have no idea of what the outcome will be. If you've backtested your trading strategy and created an exact plan, that's what you need to be sticking to in live markets as well. Having a pre-trade checklist is a good idea for most traders actually. This puts a barrier in place and ensures that you are following your trading strategy and that the necessary steps have been taken before you enter any trade. Doing so should reduce your drawdowns in the markets. Although it's worth noting that a large amount of entries doesn't exactly have to be overtrading, as long as all of them are following your trading plan. An area where we see a lot of traders going wrong is the exit strategy. Focusing on entries and setups is of course important, but it's useless if you don't have a plan of when you're gonna exit. This rings true for both losing and profitable trades. You need to have an objective plan in place that describes at which points you're going to close your trade, regardless of outcome. By doing this objectively, like for example using Fibonacci levels, takes a lot of the human indecisiveness out of that and allows you to backtest your strategy more easily. This should be an integral part of your trading plan. For more information on building a successful trading plan, check out this video I already made. Ultimately, the key to managing drawdowns is knowing what you're doing. All of the mistakes I've mentioned so far would have not been made by a professional trader with a well backtested strategy. By backtesting your strategy, you'll be able to know the metrics, statistics, you know what to expect from your strategy, you'll be able to polish your entries and exits, and overall you'll gain an idea of what your strategy should be behaving like and what you should be doing. This can help us completely remove the emotions from the picture. With emotions removed, you'll be much less likely to make any human errors in the markets, and therefore you're going to be able to increase your profitability and decrease your drawdowns. Once you've implemented these tips into your trading strategy and hopefully you've been able to obtain a funded trading account, I strongly recommend that you keep these as an integral part of your trading strategy. If you are interested in becoming a funded trader, I'm gonna leave the link to our funded program down in the description of the video. If you liked the video, don't forget to share it, like it, subscribe, and if you want to ask us any questions, feel free to reach out to our 24/7 live chat or send us an email at info@luxtradingfirm.com. Mine has been Oliver. Thank you for watching and have a great one.